Hello, everyone. Dylan Langei, branch manager and home loan officer with Evergreen Home Loans. And it is the July mortgage update. We are halfway through the year. Absolutely crazy. It's my birthday month as well. Can't complain. Going to Suncadia on Friday with some friends and the families and the kiddos. So I'm one happy camper. But first off, want to remind you, if you're watching this on YouTube, make sure you do subscribe to the channel to make sure you get up to date on any of the mortgage updates that I send out, or any new product releases, or just, crazy real estate videos that I want to send out. So make sure you do subscribe and drop a comment what you think. I'm going to go into, you can see I've got like 10 tabs open right now. I'm going to go into a lot of data today and we'll say it, I'm going to go on a little bit of a tangent, a little bit of a, not a rant. I feel like a rant has a negative connotation, but I'm just seeing a lot of potential home buyers that are sitting on the sidelines. And I just want to, I don't want to give my opinion. I don't want to come off as the guy that, is looking like I want other people to buy houses and I'm not doing the same thing. So stats don't lie. So let's dive into it. So July mortgage update. This will be the PDF that you're hopefully getting. If you're watching this video on some sort of social media platform, you can email me. All my contact info is right here, and I can send you the PDF. My nugget of the month, before I get into rates, internal turn times, appraisal turn times, is, are you someone that's waiting for a market crash? And I, condone you for that. Sure. Wait on the sidelines, wait on the fence, whatever it is. When I got in this business in 2015, I had clients that were telling me, I'm going to wait for the market to crash before I buy a house. No problem. You sit on the sidelines. Other people will still buy houses. And those people that didn't buy in 2015 are now priced out of this market. They would have had $300,000 worth of equity, right? We've all seen it. Every house that I've bought, and I've said this on social media and these different videos, every house that I've bought, I've felt like, did I make the wrong decision? Is this the end of me? You're in the market you're in, right? I look back at the houses that I bought in 2015, 16, 17, 18, 19, 20, and I'm like, gosh, I should have bought 10, 12, 13 of those. I didn't feel that or think that in that moment. But real estate is a great wealth building tool, avenue. I invest myself. I'm not just saying this because I'm a loan officer. I truly believe it. So let's look into the data, though. You don't have to believe me. Let's look at the data. Anyone that's saying that they're waiting for a market crash further than what we've maybe seen, whenever someone says they're waiting for a market crash, here's what I think. They're waiting for something similar to 2008. Okay. Watch The Big Short, whatever you need to do, study. We are not in 2008, 2009. This is completely different. Okay. I could talk about this for 2 hours, but just go watch The Big Short. It's entertaining. Schmidt from New Girl's on it. It's my favorite part. But let's talk about this, right? Because I see both sides of the coin. Home affordability is at an all-time low. I'm in the Whatcom County market. So if you're outside of the Whatcom County market, I'm going to talk more about Whatcom County stats, but a lot of what we're feeling is national news and impacted by national and global economics. So we're going to touch on a little bit of everything here. But let's first start out with, and honestly, I'm going to talk about, rates and applications because this does tie into the market. So I subscribe to Mortgage Market Guide. It's a guy by the name of Bill Bobner, super smart guy. I follow people that are smarter than me. That's my secret sauce. Today was a crazy day. Right now when I'm shooting this, it's July 12th. CPI, Consumer Price Index, came out. Green on the screen is good. We saw CPI come in at 3%. The expectation was 3.1. The height was last June at 9.1%, which is insane. We've now seen that come down in about a year from 9% to 3%. That's ultimately the Fed's goal, is to kill inflation. We cannot sustain an economy with 9% inflation. That's just, people's income is not going up by that much. It would just crush everything. So really good days in the market today. We're in a volatile time. Literally, I could shoot this video. Sometimes I don't get the newsletter up for a few days. everything could change. So just take that with a grain of salt, but really good day in the market today. We won't get into candlesticks and bond pricing and all that. But as I said, CPI, the estimate was 3.1, came in at 3%. The prior month, it was 4%. Once again, the high was June, is 9.1%. Let me show you this really quick. So CPI. So it's always a percentage month. So it's a percent change from 12 months ago. If you've followed me on social or seen, I think it was my last mortgage update I did, maybe the one before that, I had listened to Barry Habib's, he had like a 3-hour seminar. And I've been listening to Bill Bobner, right? Once again, people that are smarter than me. And they were saying, we're going to see a relief once we get to the June, July readings. The reason why is, look at the CPI numbers. So the Fed right now is out there, toting that they want 2% inflation. The last time we had 2% inflation was March of 2021, 2.6%. Okay. Mortgage rates were still very low. Mortgage rates did not go up until about June of 22 was really the big one everyone remembers. So let me go to the 3-year mark. June right here. Sorry, right here. June of 22, that was our first peak. Maybe I'd say second peak, right? You have May. But really, rates started going up in that November 2021 time period, okay? They peaked out, though, in June of 2022. So what I always say is inflation and mortgage rates are closely tied together. The reason why, and a lot of people have this misconception that when the Fed increases the Fed funds rate, mortgage rates skyrocket. The Fed is increasing the Fed funds rate to slow down inflation. Inflation and mortgage rates are closely tied because mortgage bond pricing, right, is an investment. It's fighting for investment against inflation. So if inflation is, 9.1%, right, year over year, that means that these goods are getting 9.1% more expensive from last year. Now, people ask me, what is CPI made up of? Housing, 34.5%, food, 13.4%, transportation, 5.9%, commodities, 21.3%, healthcare, energy, education, other expenses. That means that those were 9.1% more expensive than the year prior. That was the height, June of 2022. And that's really, we saw mortgage rates take off. But once again, the inflation problems really started in 2021, started going up. See that? But our economy is not like the inflation goes up and pop, mortgage rates go up. Takes a while, which is why we've now seen inflation start going down since June. It's been a year. It's at 3%. The Fed's goal is 2%. And we haven't necessarily seen mortgage rates plummet, right? It took a year for them to go up, right? We could start seeing similar things. And of course, there's many variables, global economics, national stuff. COVID was something that nobody could predict. Maybe people could, right? But so that's a main reading that we've got going on right now. So we've got, mortgage rates peaked out in, let's say, October, November of 2022. Okay. And so this is PCE. This is another gauge of inflation. I guess I should talk about this. So PCE, though, I know Wikipedia is not the best source for news, but food and beverages. So it's a different inflationary reading than CPI. 15.1, housing's 42.4, apparel, medical, transportation, education, right? So it's just a different way to read inflation. And we've seen that start to tick down 3.8 in May. So once again, you're seeing inflation going down. We should see mortgage rates start to go down. Most people think, woohoo, right? Mortgage rates are going to go down. I'm going to wait for the market to crash. I'm going to wait for mortgage rates to go down before I buy a house. Those are the two things I always hear. I'm going to wait for the market to crash. I don't want to buy a house now, even though I'm fully qualified, or I'm going to wait for mortgage rates to go down. Well, let me kill the first one about the market crashing. So what I would say is market crash would be, just to simplify it, supply and demand, right? If you have way more supply than you have demand, you could have a market crash, right? If you have way more demand than supply, obviously the prices are validated. Okay. So there's two pieces though. Let's look at price and months of inventory. Once again, there's national news, and then there's local, hyper-local news to Whatcom County. So nationally, when people say they're waiting for the market to crash, if they're alluding to 2009, we had 12.2 months of inventory. Okay, that means that if nobody listed their house, the level of demand would buy all the houses on the market in 12.2 months. Right now, we're at 6.7. Okay, half. This is national. Okay, so the national average is 6.7 months, half of the last crash, right? Also, look at this. When COVID happened, when mortgage rates went up. So this was, when was COVID? Stuff is always so fascinating. When COVID, we were still COVID. When mortgage rates dropped, we still had, about that 6 time frame. Then mortgage rates plummeted though. And look at that. National average houses on the market. So 3.3 months of supply. Because August of 2020, right? It's fun to compare these. August of 2020, you had an all-time low in rates, right? 2.88. I mean, everyone was buying houses. So, see, this is the problem with me having too many tabs open. So, right now we've got 6.7. Okay, that's national. Let's look at hyper-local. So this is in Whatcom County. This is residential only, no condos. Months of inventory, on average, 2.17. So we are 4 months lower than the national average. So once again, my main buyer pool is in Whatcom County. The majority of people watching this are in Whatcom County or Skagit County, somewhere around there. So this applies to us, right? 2.17. So tell me where the market crash is coming from. I just don't see it. Also, you have to take out some of so these are in numbers, but let's look at for kind of outliers. So 15 months of inventory, 871. Well, 871 is Lummi Island and Eliza Island. Not a very big market, right? 2 new listings, 7 in 2022. It's this, if you took that out, 8.5, that's market 881. That is Point Roberts, also a very unique market. And 5.15, which is 895, is Mount Baker and Deming. So once again, let's look at Bellingham. That's the hottest market. That's 860, 1.45 months of inventory. If nobody listed their house, all the houses would be gone in 1.5 months. So once again, if you're buying in Whatcom County and you're waiting for a housing crash, the months of inventory is not giving it. Okay. What I alluded to on rates, right? You're waiting for rates to come down. Totally get it. You want your mortgage to be more affordable. Rates are going to come down. A lot of these inflationary numbers, that's what I'm alluding to and getting to, is with those inflationary numbers coming down, the Fed's starting to change their sentiment about, okay, yeah, wow, inflation's coming down. Maybe, they're not being as hawkish. Maybe we won't hike twice more this year. They already took a pause, a month or two ago. So we're going to see mortgage rates go down. When mortgage rates go down, let's say, the national average right now, let's look at Freddie, 6.81. So what are you waiting for? What does it need to be to make you feel comfortable? 5, 5.5, 4.5, right? What's that going to do to our months of inventory? It's at 1.5 months right now, right? It's going to get obliterated. More buyers are going to come in the market. It's going to be harder to buy a home. So be very delicate with this waiting game, right? There's many tools out there to buy now, incentives, seller credits, to do unique programs, buyer booster where you get a $2,500 credit towards a refinance for the next 2 years. A lot of incentives before these mortgage rates start going down. The inventory is just going to get attacked. And granted, the counter argument, maybe if mortgage rates go down, more people will move because they'll buy a new house. They're not handcuffed in this 2.75% rate. But once again, mortgage rates coming down doesn't mean rates are going back to 2.75. That was artificially low by the Fed buying billions of dollars of mortgage-backed securities. So, once again, I counter argue that counter argument. But once again, so, in my thing is maybe we have already seen the bottom. So June was the height. Okay, June last year was we'll say the height of the market. So this is perfect because this is comparing June. And let's look at Bellingham. I feel like Bellingham is very indicative of where things are at. It's the hottest market in Whatcom County. So the median price of June 2022 was 800,000. Now it's 760. Okay, and this is on closed sales. So this is a great indication. So that's a 5% change. Okay, but we're also down 23% in closed deals, right? There was 67 this month, 87 last year. So there's less homes on the market, less available, more competition, but the price is 5% lower. 5%. Market crash? Where? Maybe in Tubuck, Kentucky, but Whatcom County, we're not seeing it. Pending sales are down, right? Active listings are down 25%. Why is that? I don't know about you. I got a 2.75. I got a 2.375 on a 15-year note right now. I'm not selling my house, right? I'm renting it out. Rent prices are about $1,000 a room right now in Bellingham. $1,000 a room. 4-bedroom house, $4,000. So once again, the stats don't lie, right? The months of supply, hopefully, the inflationary numbers, this makes sense. This is a good trend for mortgage rates. We're seeing mortgage applications, in this month, up 7.2% that week, up 0.5, up 3%, down 4.4. That's when we had the big hike in rates. But we're starting to see mortgage rates settle down. So if you look in, the last month, let's say, so let's do in the last year. In the last month, rather. Right, you see them pretty flatline. 6.79 was the national average, now 6.81. Okay, they've flatlined. I think we're going to start seeing those soften a little bit more in the coming months. This is not an overnight thing. If you're under contract now, doesn't mean that these rates are going to drastically get better. But once again, I caution anyone just waiting on the sidelines for a market crash or more inventory. We're in the summer market. We're past the spring market. We haven't seen a mad influx of inventory. So that's my warning to anyone out there looking to purchase a home. If you're curious how to get yourself ahead, make your offer stick out, make sure you watch some of my previous videos or look into our Security Plus program, our Fastest Cash program, our Step Up program, which is a bridge loan where you can, buy a new house, utilize the equity in your old house. So there's a lot of great programs. People are still getting seller credits. It's a great time to buy right now, wait for those rates to drop, and then refinance. If you're somebody that's perfectly happy with your house in a 2.75% rate, don't go anywhere. Totally get your side of it. If you're a first-time home buyer, if you need to upgrade, you have more kids, more dogs, more kids are moving out of the house, kids are moving into the house, whatever it is, life changes. Don't be hesitant to buy in this market. Of course, make sure the payment makes sense for your financial situation and the cash out of pocket and the down payment and all those things, but don't be too hesitant. So here's what mortgage rates are doing. I always run this at a $700,000 purchase price, 10% down, 780 plus credit. 6.375 would cost you about 2 points. 2 points would be 2% of your loan amount. So, as you've seen, the national average is about 6.81% on a 30-year note. The mortgage rate trend in the last month is flat. Mortgage application trend is up. So once again, more applications means more buyer demand in the market. I wish we had a hyper-focused application count for Whatcom County because I know myself, I've got about 30 pre-underwritten buyers. My team here, we've got over 250. So there's a lot of buyer demand out there. So I guess, also if you're a seller, this is a huge, shout from the rooftop that there's a lot of people out there looking for houses. Internal appraisal turn times, we can close loans in 2.5 weeks. That's, 2 weeks, best case scenario. We're typically seeing between 3 and 4 weeks, getting appraisals back in about a week in Whatcom County. So things are happening really, really quickly. I'll shut up on my tangent. That's just the thing. That's the hard facts, the data. Please reach out to me if you have any questions at all about the market, about your current loan, about your house, value of your home. I've also got a bunch of great partners in the community, whether that's contractors, accountants, insurance agents, real estate agents, all of the above. Reach out to me. I've also can kind of created a list of off-market coming up properties that are going to be hot on the market. So if you're somebody that's maybe looking to not compete, reach out to me. I guarantee that I may have something that would fit your needs. And or if you're a seller that may want to sell your house and you don't want to list it, okay, if you have a real estate agent, I may have a buyer that's looking for that. So reach out to me for anything, and all my information should be either online or in this video. All right, see ya.